We'll be starting in about 2 minutes, folks. And Matt is back. Can you make sure everything went out, Matt?
Morning, everyone, or good afternoon. Did anyone get an email today? Thanks, Robert. Thanks, Janet. There we are.
There we go. All right, we got Matt back.
Yep.
We got go. Okay. Perfect. And we got 22 people on YouTube, kind of light on YouTube. Let people know in the VIP room I'll be back in a couple hours. Okay. All right. Can you guys hear us, see us okay? Happy Monday, everybody. Raleigh, I believe Raleigh, does he know if he comes back tomorrow or does he come back on Wednesday? I don't remember.
I'm not sure.
I don't remember exactly. He either comes back tomorrow or he comes back on Wednesday. Let me say hello to everybody here and then we'll get started. Ethita, Solaire, Robert, Omar, Andrew, Catherine, Christopher. Before I go any further, if I mistake or mispronounce somebody's name, the last thing I'm trying to do, I'm not doing it on purpose, okay? Um, we got Robert, we got Petro, we got Jeanette, we got Marlo, we got Wild Ranger, we got Matt, we got Jolene, we got Admi, we got Van, Stanley, Brendan, Christopher, I, Ivan, Alex, Brendan, Stan, Bob, Steven, DJ Dave, how are you? Richard's here. Mary, Sandra. No email today. That's not good. Give customer service a call. Cliff, Brendan. Good morning, Bob. Dollar Bill, Shannon, Stacy, Gus, Sandra, Mike, Mark, Doris, Elizabeth. We got a lot of people here. Hey, Wesley from Lake Las Vegas. How are you? We have Carol, we have Becky, we have Bob, we have Jolene, we have David, we have Van, we got Wild, Ranger, Kirk, Kai, Jack, Bugs, John. Hey, Bugs, John, Jolene, Chris, Flying Rodin, Ivano, Chad, Robert. Yes, Dave Dunn, Frisky, Mr. I'm very frisky. Yes, Dave. Marina, how are you? Steve, Scotty, Ted, David, Don, Kyung, how are you? Based on my information on Tesla, I think I've been keeping my mouth shut on Tesla lately, actually. Oh, no, I send you that chart. No, I did not. I sent that chart out. That's right. That's right. I did. That's right. You are right, and I am wrong. I deal in so many stocks, Peanut, that I don't even remember myself sometimes. Robert, Deanna, Jim, from Irvine. Oh, I'll be going back to California end of the month for a wedding. Hey, HG, how are ya? Fred, Terry, David, Claude, iPad, Richard from Puente Gorda. We missed you this morning, Richard. I was looking out for you and your catalysts, and I did not see them. We got Mike, we got Claude, Richard, Glenn, Bob, Zoom user. Hey, Bob. Paul, Kurt, Bobby, Fred, Peter. Peter, how are you? iPad, Linda, Lee, Richard, Paul, Richard, how are you? Ah, gotcha. Drew Blood, I got it. And Richard changed to everyone. All right. And Genevieve, Devin, SJ, Steve, Kevin, Richard, good morning. Now let me share my screen and let's get down to business. So as far as the market is concerned, just want to kind of give you a little roadmap here. Let me get my TC2000 here. We can move ahead. Oh, yeah, I already got that alert. So first things first, you guys should be able to see my screen. Yes, you can see my screen. Okay, first things first. The first thing we want to look at is the fact that if you look at momentum right now, or lack thereof, you could see there's really not much driving this market. See nothing over. Hey, Will, how are you? Sergey, how are you? Good to see you, Will. I did not forget about you. I just didn't see you. Very nice, Bob. We're almost at 7. This is like the dead of summer. All right, all right, all right. Let's get into it. And again, if I miss somebody, I apologize. Not my intent. We do have a lot of people here. We have 425 here. We have 35 on YouTube, and we're going to peak out at about 700. So real quick, folks, let me focus on this. I want to give you the best hour because I want you guys to brag to Raleigh when he comes back, either tomorrow or the day after, and tell him that I was a very, very good host and I did not pay attention to the chat box, okay? So notice we don't have anything up or down over 1%. Everything is holding steady right here. So there's not much momentum in this market. Moreover, when we look at market internals, you could see that this Volt, I mean, this thing is not trending. I mean, right now it's trending up. Before this, it was trending down. Before there was, it's all over the place. It cannot be trusted. What I want to see is a steady move throughout the day, just going one way down. That's when the Volt can be trusted. This is just nonsense. And one of the reasons why the Volt is not committal to any one side is because you're not really seeing stocks being above or below yesterday's high. So now think about this. You're looking at Volt for a sustained move, right? In order for us to have a sustained move, stocks have to be moving, right? Okay. Now think about this for a second. There's 13 stock. ADD is at 13, which means all stocks, all stocks on the New York Stock Exchange, which is where the money, a lot of big institutional money hangs out, is pretty much exactly where it was on Friday. So how much movement, directional movement you're going to get from the market? You're not going to get that much directional movement in the long scheme of things, unless this starts really becoming the only exception to that rule is survey says, and there you have it. Remember what I always say? If you're not getting any love from here or here, but the market's really moving like it is right now, like this, always, if you're not getting it from many stocks, then you're probably getting it from the 5 stocks that have 40% market cap. The reason I looked at MAGs is because I saw the market rally and I saw nothing from ADD. And I saw, I mean, this Volt is, I'm not trusting it at all right now. But look at mega caps. Look at mega caps. There's something in the 5 or 6 mega caps that's driving this market right now. Okay? That's driving this market right now. So when you're looking at the market and you see it moving, but you don't see the ADD behind it, that means the momentum is very narrow. There's a very few stocks driving it. And usually, if it's enough to move the SPY, it's going to be the MAGs. Now that's great, but here's the problem, folks. This is not going to solve our problems, unfortunately. These four stocks are not going to solve our problems. This will solve our problem. And what is it doing? Going nowhere. Very nice, Adam. Grab that from Adam, Matt, would you? Very nice. Not too shabby at all. I hope you're, most importantly, I hope you and your mom are feeling better, Adam. So this right here is this is really what the market's doing right now when you strip away the market cap. And as you could see, and I told you about this morning, it's not really doing much. It's not really doing much. So, yeah, if you're in Tesla, Nvidia, Microsoft, those stocks, yeah, they're doing great, but this is really what the market's doing. And if you look at QQQ, thank you, Mags. You know, look at Mags and look at this, but look at QQQE. Do you see my point? Just hovering along the 50-day line. I mean, I like this. This is great. But this is where you're at right now. What are the tickers you have on with Vold? That's Ted. That's something you get when you purchase the Alpha Zone Pro or the Trading Zone Live. That's the market internals dashboard. Okay. So, hey, Mike, good morning to you too. Bill, good morning to you too. Genevieve, hello there. Okay. So, and by the way, that also goes with the fact that, hey, what's driving the market if the mags, literally, when I say the mags, I mean the mags. I mean, look at this thing. Look at the S&P 500 bar by bar. Look at the mega caps right here. Do you see that? Look, S&P mags. It's not a miracle. So you have to be very, very mindful of that. Okay, be very mindful of that because here's the problem. It's very hard when you have a lot of stocks driving an index. They don't just do a 180. Okay, but when five stocks are driving the market, it's very much easier to pull a 180. And it's very easy for Microsoft and Nvidia to just cool off a little bit. But for the market, that could be going up to that could be coming up to here, which is just going to the VWAP. And on a date here, let me show you. On a daily, where is it? 60? This thing coming down right here, which wouldn't even be a hiccup. But for anybody looking at a daily chart, that's all the way down here. Intraday chart, I mean, that's all the way down here. Point is, the market's being moved right now by by literally five or six handful of stocks. And there's really nothing else happening right now. And if you really want to see what the S&P looks like, this is what you should be looking at right now. And you can see on a daily, it's doing absolutely nothing. I mean, absolutely nothing. And what I'm saying right now, we talked about extensively this morning, by the way, in the room, that you have to be very, very careful right now because I'm not seeing a lot of stocks driving the market. Now, don't get me wrong. I'm not complaining that mags are driving the market. That's great. But realistically, it's not very sustainable. It's just not sustainable. Okay. Now, I want to give you guys some stocks that I'm looking at right now for my watch list. Okay. Let me do that right now. Let me give you my watch list stocks. Okay. And then I want to talk about synergy of three different synergies. Okay. So let me get through this because I don't want to do it later because I'll be late to the party. Excellent, Richard. Grab that from Richard, Matt. Okay, short this is my short list, okay? Twilio. Okay? Twilio. Now, real quick, just to review. Let's say you went and listened to Uncle Roger's VIP room on Friday. Well, you didn't listen to it on Friday. That's great because I put it on both the private and the public Telegram channel over the weekend with the worksheet that I made for you. So let's just practice what we learned on Friday using these examples that I'm going to give you right now. That doesn't hurt, does it, Richard? Yeah, that doesn't hurt. You're welcome. Good, good. All right. Good. 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 When you get to 20, send me an email and I'll send an alert to get out, okay? All right. So let's practice. And if you don't know what the hell I'm talking about right now, watch the replay from Friday. There's a link to it in the Telegram channel, both the premium and the free one. I specifically asked them to take out the webinar and repost it on Friday with the worksheet. So let's do this. 0.50 delta, 0.50 delta, starting point, 0.50 delta, 96.50. Let's go down to 97.50. Is Friday more than 3 days away? Yes. Is it between 4 and 8 days away? Yes. We buy the 96.50. We sell the 97.50. We do this for excuse me, I apologize. We buy the 97.50s, we sell the 96.50s. We do this for about 50 cents and your profit is $1. So you have 50% profit potential. And if it expires on Friday and you're still in the trade, you just go and you do it again right here. And you keep doing it till it works out for you. Okay? Matt says, I have a feeling for Friday's session will be life-changing. There you go. Well, today you get to practice it. I'm going to show you several examples using Friday's session. So Mandela's nicely breaking down, really choppy stock, but really nicely breaking down right now. So let's say we wanted to day trade this baby, hypothetically speaking, of course. We start with a delta of 0.50. We have 4 days to go, so it fits our criteria for 4 to 8 days, right? Right. So we would start right here at 61 put, right here, and we would go to 60 put. Let's go to 59 put. We could probably do the 60 and 59 for 50 cents. And again, that would be 50 cents, and we would have $1 profit potential. If we can always try to do the 60, excuse me, we could do this one for $1, or we could do 61.60 for 50 cents. So our rule is we want to take in 50% or less. We want to pay 50% or less of the spread. We want to pay 50% or less of the spread. Roger, I missed Friday. Well, you're going to see me do another 15 examples of it. Do you guys want to see it? Do another 15 examples for you, okay? All right. So good. All right. So you could do 61.60, that's 50 cents, or you could do 61.59, and that you could do that one, and that's like 55, 60 cents, and you have profit potential. So you have 100% profit. You have way more. You have about, let's see, 50 cents, $2. You have 150% profit potential right here. Okay. Should we put action? What? Orders? No. Why? Is the stock ready for you to do anything on it? I mean, did I tell you it's ready? I mean, I'm just showing you examples using the daily chart and examples. Don't get ahead of yourself. All right. CMG, nice daily chart. Haven't even looked at the 5-minute chart, just giving you hypothetical examples, doing what the exam I'm building on what we started the previous Monday. Okay. All right. That's what I'm doing here. I'm building on this. Okay. 4 days out. Yes. Is it more than 3 days? Is it less than 8 days? Yes. Then we're still here. Okay. 50 delta, 42 put. We buy the 42. We sell the 41. What's the 30 cents here, right? 30 cents. So you're spending 30 cents and your profit potential is 70 cents. It's actually $1, but I'm already eating the 30 cents. 70 cents net. So you got 100 and something, you got 30 cents you're spending, profit potential $1.10, over $1. It's pretty good, right? It is far to say selling the 0 cents on bid. Sean, I don't even know what you're saying right now. Let's continue. Mandela's. Okay, let's look at Mandela's again. Right here, I said buying the 60, buying the 61 and selling the 60, or buying the 61 and selling the 59. None of them have 0 cent on the bid. You would have to work this order, and actually right here is what it would cost. So you're paying 70, and you're buying 50, you're buying the 61, you're selling the 59, it's gonna be 60 cents, and your profit potential is $2 here, which is fantastic. So Sean, stop saying nonsense, please. All right, let's continue. CMG. CMG, nice looking chart. 50 delta, we're going to buy the 42 put. We're going to sell the 41 put. You're going to pay 52. You're going to subtract 22. It's going to be about 33 cents. Your profit potential is $1 right there. 70 cents profit, 30 cents you spent. Okay, let's continue. Dow. Notice I'm not searching for strike prices. I don't care what the strike price is. I'm looking for a 50 delta. Right here is my closest delta, 47. I'm going 47 right here. Maria, stop asking for details and start looking at what needs to be done. What you're talking about is 5% of the equation, which is this right here. I'm going to show to everybody. And start focusing on how to find the trade. That is correcto, Richard. So puts. Okay, because we're doing to the put side. So 47 delta, we're buying the 20 and a half, and we're going to sell the 19 and a half. Can we do this for 50 cents or less? We could do this for 30 cents. Well, Roger, 30 cents, that's cheap. Yeah, but you're only buying 4 days, and you can make 70 cents minus your 30 cents here. That's more than 2 times what you made if this moves down. Okay? Ruth, if you can't do spreads, just buy the 47. Why can't you do debit spreads? Okay? This is a big strategy when I couldn't afford expensive ones. Now, listen to what Richard says. Richard's making $300,000 a month, and he's explaining to you why I'm doing this. Now, how many of you have small accounts? Raise your hand. And now read what Richard just wrote. And this is a time for all of you to stop posting things and for the sake of letting me talk, unless you've got it all figured out. Do you want to learn how to make money with cheap options? Yes. So stop talking and start listening. Now let's continue. LYB. And if you don't know what the hell I'm talking about, go back and look at Friday's session. Okay. LYB. 71 is the closest thing we have to 50. So let's say we buy this at $1.97. Well, we still can offset this right here. Right here. So about $1. I mean, I wouldn't do this. This is lunacy. But you got 5 points you could make here. Okay. This is not good odds. I wouldn't do that. All right, let's continue. I think people just have a need to write things. All right, 62 right here. I would just buy this. Or I would go right here. No, this is too far. But my point is more than 3 days out, less than 8 days out, but boom. Roger, but you're not giving me enough time. What it expires? Well, usually, as I showed you in a couple of examples, like Twilio, you wouldn't be paying very much. You're paying like 30, 40 cents. If you're paying 30, 40 cents, just buy another one the next week. Look, let me give you a good example, right? Like this is going to be one of our long stocks. No, sorry, STX, not STT. This is one of the long stocks I'm going to show you, okay? So let me just show you a comparison. We're going to Zoom user. Right now we're talking about debit spreads. Would you like me to change things to the way you want me to teach, or do you want me to just continue teaching? People just can't help themselves. They just can't help themselves. If I say A, they will say B. If I say C, they will say D. They just can't help themselves. All right. I'm trying to give you 100% and you're doing everything possible for me to give you 50%. I have a perfectly good email. And the funny thing is nobody's going to send me one email question asking me a question about this. But here everybody feels really chatty when I want to really teach you guys something really important that can help you make money if you have a small account and you can apply it to any of your services. All right. Let me continue. At least I'm doing good on time today. Uh, all right. So look at this stock. Let me show you. Let me explain to you why. Why? Maybe if I show you why this is important, you'll stop being so chit chatty. So say some dude gives you a trade, a swing trade, an A-line swing trade on STX, and says go 4 weeks out. Okay. So you go 32 days out, and let's say you get a 70 delta, you're going to pay $11. All right. All right. That's a lot of money. Roger, I have a small account. I don't have the account to trade this way. You lied to me, Roger. Misrepresentation. You're a liar. You're a bad man. You lied to me. You told me I was going to be able to trade for $200 and I'm not doing it. Ooh. Okay. So this is why we're doing this. So instead of going 32 days out and going 70 delta, thank you, Richard, to 147 call and paying it $1,100 or $1,050 or about $1,100, right? You can go 4 days out, buy the 152.50 call, sell the 155 call, right? And how much are you going to pay for this? Well, you're not going to pay more than $1.25. Right now, this is about 355. This is 215. Yep, it's about 215 right now, 220. All right. And look what you got here. Your profit potential is $2.50. You're only paying $1.25. That's a big difference. So, well, Roger, what if nothing happens in 4 days? Okay. Did you pay $1,100? No, you paid $1.25. You paid $125. Wait a minute. Wait a minute. Hold on. Did you just show me how to do this trade for $125? That's what I've been trying to show you for 25 minutes. But people are going out of their way for me not to do that. Like really fighting me on it. Like tooth and nail. Yes, Mike. That's what he said right here. Bob, since you just got here, I'm trying to show people how to make 100% return with a tiny account, but they're going out of their way to avoid me from doing it. So now that I got your attention, can I continue? Would you like me to show you some more examples? So let's say this expired. Okay, you would have spent $1.25. You wouldn't have spent 1,100. So you buy another one that expires next week on Monday of next week when this expires. You spend another $1.25. Guess what? You spend $2.50 and you buy yourself 2 weeks. Maybe you can stop sending me well, I actually don't get those emails, but you know those emails. Roger, remember that trade from a year? I still got an email last week. I got an email. A guy told me he stopped trading the pit because of those 3 losers we had last year. He still remembered them. He still remembered them. I'm not joking. We've had 385 winners and 22 losers, but somebody remembered those 3 losers we had last year. It's the funniest thing in the world. People are amazing. How am I calculating the profit? Finally, Naples fan. That's a great question. I'm gonna have to. I'm gonna have to talk about this. So the difference, your profit is the difference between the 2 strike prices minus your premium paid. Capiche? I'm going to repeat that. Difference between 2 strike prices minus the premium paid. So let's do a real example of this. All right? Never. What's the difference between these 2 strike prices? It's $2.50. That's right. That's right. $1.20. It's $2.50. What is the spread going to cost us? Well, it better cost us less than $1.25, less than 50% of the spread. Otherwise, you don't want to take it. In this case, it will. Look, this will cost $3.50. This will cost $2.20. $3.50, $2.20. That's $1.10. Bingo! You're less than 50%. You're in the 40-something% range. So you spend $110. Wait a minute, Roger. You're telling me I don't have to spend $1,100 yeah, I am. So let's do this again. All right. All of a sudden, less people are talking. Thank God. All right, let's continue. Hood. All right, so hood, a little overextended. I would wait for this one, but let me show you. Let me show you. Let me show you all the fun you could be having in the sun. Let's say you go 32 days out on a regular swing trade, right? 3 to 4 weeks out, like somebody I know tells us, like Clyde always recommends, 67 Delta. You just spend $1,180, give or about 11 right here, about 1170, 1175. So almost $1,200. All right, almost $1,200. Okay, that's not bad. But Roger, I don't have $1,200. There you go, Ambrose. You see, you still remember it. And how many losers have you had since then? That's the question. The Home Depot. Oh my God. God help me. God help us all. Okay, let's continue. This is fun. I'm having fun finally. Um, or you could do this. You could do this. You can buy the 320. You can buy the 320, right? But since then you paid for VIP twice. That's what I thought. Thank you. All right. So look. So here's a problem. This is what Naples fan was talking about. We can't do this. This is illegal because look, this is going to cost you 310 and you're going to sell this for about 265. 310, 265. That looks like more than 50 cents to me. And you can't pay more than 50 cents. It's against the law. Clyde's law. Because look, your profit potential is $1. So you can't pay more than 50 cents. So, how about buying the 117? Remember, you got to start at closest to the delta of 0.50. That's your starting point. That's your anchor. So here's 0.47. Here's 0.47, and we're going to buy the 117 and sell the 119. So look at here, 310, right? 220. Yeah, 310 to 220. So the difference here is it's 90 cents and my profit here is $2. So I got mine right there. See, I didn't feel warm and fuzzy with the 117 and 118, but I feel warm and fuzzy with the 117 and 119. Cuz look, I sell the 117 for 305 and I buy the 119 for 220. That's 80 cents, right? And my profit potential is $2. Roger, are you telling me that I can buy this stock, this hood that's in the hood that's 32 days out for $1,170, or I can just go 4 days out and I still have an opportunity to make, let's see, 80 cents versus $2. That's $1.20 profit potential. So I have more than 100% profit potential and I spend $80. Okay. And if I'm wrong, I can just do it again next week as long as the chart still looks good. Yes. And you can let your option go to zero because you spend $80. Folks, send me an email if you have a specific question. I'm on a roll here. So do you understand do you guys understand what I'm saying? Let's do another one. How about Microsoft? All right. RV Hanning says, I use debit spreads on 95%. It's Karen, it's on your end. Can I do debit spreads on 95% of my option buying? Smart man here. All of a sudden, less people are asking questions and trying to confuse me and listening. As soon as I said, hey, how about buying an $1,100 option for $80? That's when I had them. So let's just do Microsoft as a hypothetical for shits and giggles. So let's say you go 30, Microsoft, Who'd want to buy Microsoft with an A-line pattern that looks like this right now? Do you know anybody who want to buy Microsoft, Matt? No? Okay. All right. 32 days out. Two days out. Microsoft, by the book, 73 Delta, 467. You could do either one. You're talking $2,400. You see, Roger, this is why I don't like the pit. You keep giving me these expensive stocks. You keep giving me these expensive stocks. And I'm sick and tired of your misrepresentations. Joseph says, please do more of these trainings. I'm trying to, Joseph, if they would let me. Here you go. You're welcome. Richard says, I'd buy it once and twice. So, so I don't know what you're talking about, Sal. Sal, I don't know what you're talking about. Sal is forgetting that rule where we when we don't mention open trades in here. Remember, Sal, that rule that I keep teaching you over and over again? The first rule. So 32 days out, 73 Delta, $2,300. Well, you see, Roger, there's a perfect example. You give me a trade and I can't take it. And there we go. I see everybody making all this money and I'm just sitting there on the sidelines chewing dirt. Well, funny that you should say that. 4 days out, 0.49. You got the Mission Impossible music, Matt? 455 Delta, 455, because we're going right here. How do I know to pick the strike price? Because Delta's 0.4, it's closest to 50 I can get. We're going to pay 455, 454, excuse me, for this. And for this, we're going to sell this for 340. That's $1.10. That's $1.10, $1.14 if you want to be specific. $1.14. And your profit potential is $2.25. $1.14, $2.25. That sounds about like 97% to me. Doesn't it sound like that to you? 600 people in here, 70 people in here. I think we're on the right track. In and out, Roger recommended trade this morning and made money. So let's say you wanted, let's say that there was a service out there with 1,600 people. And let's say, hypothetically speaking, somebody with the name Clyde put on a trade for Microsoft. Well, you can go 4 days out and you can buy the 48 Delta, 527.50. You could sell the 530. You would pay $1.10 right now, to be exact with you, because volume on this is crazy good. And your profit potential would be $2.50, which is more than $1.10. So you more than 100% profit potential. How much did you make on it, Tammy? Anybody take that Microsoft spread I gave them in? So anybody take that Microsoft spread that I gave them in the pit that somebody already disclosed? $200. Great. How much did the trade cost you? Oh, okay. I see. $1.20. Are you guys starting to understand how the game works and how the song is sang? Or are you still confused? Who's stopping you, Angie? Of course you could do these. The people love to talk instead of letting me do the talking. All right. So let's do some more examples. How about GE? Okay. I really like GE. Call your broker. How about GE? Okay. So if we go per our regular rule, the webinar I'm doing one right now, but the webinar that I did on this, I posted on Saturday morning. in the free Telegram channel and the pit and said, this is really important. I'm even attaching a workbook for you. So 30 days out, I'm hoping this is beneficial. That one's not there, David. I don't think. That one they had to repost. That one they had to repost. So let me show you again. Let's say we want to do GE, and let's say we wanted to do the closest delta to 0.50. You'd spend $930, and you'd have 32 days. Which you, the hell? Why would they be calling me now? Thank you. Sorry about that. So you'd be $910. Do you want to spend $910, or do you want a better alternative, a cheaper alternative? Well, you can go 4 days out. You can go 54 right here. You could buy it for 380. I was going to say 380, but it is right here. It's pretty liquid. And you can sell this one at 255. What's the difference between 380 and 255? It's actually, it doesn't fit our criteria. It's actually not going for 355. It's going for right now you would be doing it if you were to do this trade right now, you would do it for about 260. You would do it for about 265. I'm pretty, oh, there it is. I've been doing this for too long. 265, and this would be about 285. So 265, 285. What is that? 265, 285, $1.20. That's good enough. Now, if you can't do it for $1.20, if you can't do it for $1.20, try going here. You can go 388 to $1.67. You've got about $2.20 there, and you got $5 profit potential. So you can either go 275, and again, I'm just showing you the ropes. Buying the 275, selling 277.50, or buying the 275, selling the 280, depending on where you get a better ratio, where you're spending less to get your fit. Remember, you want to spend less than 50%. Where are you spending less than 50% of the potential on the other side? That's the only question you should have. Okay? Very, 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 very simple, very clean, and very educational. Okay? Now, I want to talk about something else. Now you guys, so what did we just cover for the second time? I covered how to put short-dated debit spreads together to give you small account traders or large account traders if you want to take less risk. You look at ATR when you're doing non-directional trades, Peter. Okay? Non-directional. This is a very directional trade. So let's not talk about ATR right now. Let's not confuse anybody. Here you're looking at what percentage of the spread you can pay least in comparison to what your profit potential is. You want to pay no more than $1.25. If it's a 250 spread, you want to pay no more than 50 cents if it's $1 spread, and you want your anchor point to be at a delta of 0.50. Please review the video that I posted on Saturday in the VIP room. Danny, please review what I just posted right now. This is an alternative. Now, a question that nobody has asked me yet is, Roger, why are you looking 4 to 8 days out on these debit spreads? Why aren't you looking like 11 days, or why don't you go 3 weeks out so you don't have to roll over? How come nobody asks me the good questions? How come everybody asks me the same thing I've already answered a million times? Ask me the good question. Ask me a good question. Why am I only going 4 to 7 days out? Because the premium and out-of-the-money options on the week before expiration is unusually high. So you get the benefit of getting paid extra on the option that you're selling in comparison to the one that you're buying. Time is working in our favor, exactly. Because there's a lot of hope on those cheap out-of-the-money options. You're buying the better one. So you know how we do time spreads? We play the bookie because we put ourselves on the side of the more expensive. We sell the overinflated option and we buy the cheaper one. Well, bingo! We're doing the exact same. We're doing the exactly same thing here, just in a slightly different way. Thank you, Wild Ranger. Uncle Roger gives us gold. Not only does he give us magnificent trade, but he also teaches us to fend for ourselves. That's a guy that's at over 400,000 for the year. Thank you, Omar. Don't ask me bad questions. Ask me good questions. I love good questions. Do you use a specific take profit? I look at the charts, Kathy. Just depends how much time I'm in the trade. How much profit I'm taking depends on how long I'm in the trade. I want to be paid for my risk. So if I'm in a trade for 5 minutes, I don't really care how much I get. If I can get 7, 8, 9% for being in it for 10 minutes, I'll take it. But if I'm in a trade for a few days, I want to be paid. So and also depends on when the option expirations are, how much I want to be paid, the daily chart. It's a combination of several things. What Trump is saying, I'm just kidding about that. I couldn't help myself. But what Trump is saying is part of it. Is he still talking, Matt? Profit is
Nope.
50% when the underlying goes beyond your lower strike price. So GE would have to go above 270, 250, and then you're 100% because that's your short strike. So your gains are capped at 275 from 270 to 270, 250, hypothetically speaking. All right. Okay. So now you understand how, if you have a small account, how to buy dirt cheap options and just keep rolling them over every week till you have a profit instead of spending 1,100 or 3,000 or 5,000 on a trade. So I'll do one last example. Then I want to talk about the synergy, the triple whammy effect. 1 second here. Tesla. Let's look at Tesla. So you see how Tesla's breaking out right here? I told my folks this morning we may be breaking out here. So let me show you. Let me show you an eye opener. Go long Tesla. Okay. Ooh, look at this. 32 days out, 70 delta. You got to pay $3,400. Not a lot of people have money for that. I have a perfectly good email if I'm not answering your question here. That's $3,400. Now, if you're Richard or if you're Omar, you could probably afford that. I mean, if you have, I mean, it's not a big deal for people who have a big account, but we all have to start somewhere, right? We all had to start somewhere. So you go right here. What's the closest to 0.50? Right here, 0.57 or right here, 0.57. It's $8.90. You buy the 342.50. You sell the 347.50, hypothetically speaking, of course. Now, unfortunately, it's a little expensive. It's too expensive. It doesn't fit our criteria. So we go 342.50 to 350. Can we get this for $3 for less than $2.50? I'm not sure. But my point here is you look at that ratio. You're always comparing the strike prices, the two strike prices, and what you're paying between them. And you want to make sure you pay less than 50% of the spread. It's a good strategy for all types of market conditions. It's like hummus, Art. Hummus is good. You know that movie? Hummus is good for breakfast, lunch, dinner. It's good for headaches. It's good for everything. Hummus. It's the answer to everything. So now I want to teach you something. Now I'm going to, yesterday I had a little class and I want to explain to you the principle behind this program yesterday. I gave everybody a real good deal yesterday. I gave everybody like the best deal in the world yesterday. But I want to explain to you what this is all about so you understand what the deal is. Matt, can you usher everybody into the from YouTube
Yep.
into yeah, thanks. So so I want to explain something to you, okay? There's something magical that happens, okay? There's something truly magical that happens when you have a really strong trend like um uh trend what was that store? Dollar Tree? Was it Dollar Tree? Yes. So there's something magical about a stock, Matt. The something you should pay attention to here. Oh, earnings. Well, no, we got enough time. So notice something interesting. What happens every time this stock goes to the 15-day EMA? Tends to come back up, right? Okay. There's something truly magical about a stock that's moving up directionally like this and has a little pullback like this. Now, when you can add another factor to that, let me just show you real quick. For everybody who's on YouTube, please make your way into the Zoom room. I'm going to do a very cool presentation right now, and it's going to reinforce a lot of the things we're talking about right now. So, so you see this indicator, RSI? RSI stands for really stupid indicator, really stupid indicator, because the usual settings is 14. If you have it, yours don't say 2, yours say 14. It's very dumb, very, very dumb. We have to make it smart. So we're going to take 14 and we're going to make it into 2. Going to apply it right here. And look at what happens. And look at what happened right here. By the way, you have a very, very strong trend. The 2-day RSI is below a certain level, a key level, and it happens to be Monday. Matt, do you like this stock?
Yeah.
Not bad, right?
Mm-mm.
Would you say this doesn't look like a bad true trend trade?
Nope. Doesn't.
All right. So, folks, now here's a question you may be asking yourself. Sometimes I love these great Bollinger Width. Look at Bollinger Width. Yeah, let me take a look at Bollinger Width. I know it's going to look fantastic, but I'll look at it anyway. Oh yeah. Oh yeah. Yeah. The only problem is I'd wait for it to stop going down, but that's not here nor there. This is beautiful right here. Now, a lot of you, Kevin says there is the magic. Now, a lot of you will say, well, Roger, if a small pullback is good, then a big pullback must be great, right? What do you all say to that? Who thinks that's a true statement? If a small pullback is good, then a big pullback is great. Who thinks that's a true statement? Boy, Matt, they've been paying attention. They've been actually listening to things I've been saying. Fibonacci lines, Rod, you're in the wrong class. You're in the wrong class. Fibonacci lines. Ask me how many times in my life I've used Fibonacci lines. Okay, so now, folks, unfortunately, I'm going to teach you something right now, and it may sound really dumb, but it took me many, many years to figure this out. And most traders, if you ask 99% of traders, they will tell you that this is not a deep enough pullback. Matter of fact, I want to show you something really interesting. Let me show you. Let me modify this. Let me show you on a 14-day period. This thing is not even at 50. It's not even, I mean, it's got to be at 30. It's not even, it's at 61. So according to the RSI, now let's look at this stock and let's see, according to the RSI, how many times it had a real pullback. Oh, it had a real pullback right here. Now, notice what happened on this pullback. Was this a pullback or was this a pullback? A big RSI just confirms that we're moving lower. That's why we call this the really stupid indicator. A 14-day RSI is the dumbest indicator you could ever find. Because if you're moving to this level, you're definitely shifting momentum to the downside. What you want, it's the same thing. It's the same thing as somebody cutting your arm down and leaving this much skin on and saying, oh, don't worry, it'll heal. Versus taking a little microblade and just going where you'll be like, oh, that'll go away tomorrow morning. It's counterintuitive to most traders, but those deep pullbacks are the worst things that can happen to you. Okay. Vivek says, been with Roger since 2019. I'm going to repost this. Oh, it's very nice. Matt, can you repost this in the channel? I'm with Roger Diamond. I've tried a few others in between, but none of them worked well. Difference, is when you're doing with Roger, amazing. Thank you very much. Thank you, Vivek. I appreciate that. So when you see this RSI, don't use it unless unless you take it and you switch it to 2 days. Then it goes from being really dumb to being really smart. Really smart. Now, I created my own indicator called the quantum indicator. No, I'm not going to try to sell it to you today. And it's specifically designed for one purpose, to find shallow pullbacks on the S&P 500 like these. Okay. And it works amazingly well. I'm not going to try to sell it to you. You can always buy it. It's like a couple $100. You can always buy it later. That's not the purpose of this. My purpose of this is to teach you about these shallow pullbacks and to explain to you that there is an amazing synergy that happens when you have a clean trend like this and you have a pullback going either to the 8 or 15, depending on where you can visually backtest it. In this case, it's the 15. And when you have an RSI, a 2-day RSI oversold. That's a synergy effect. Now, there's one more thing that I'm not giving you, and I'm going to talk about that right now. Everybody who's in YouTube, Matt, give them about 15 minutes and then turn off YouTube, since we're not pitching anything for at least 15, 20 minutes, okay?
Okay.
So I'm going to give you a class right now, and this class puts together the seasonality of the week, not like a certain date. There's a specific seasonality. Now, you know how I just showed you a trend and I just showed you the pullback? Well, if it happens at a specific day, on a specific day, that makes the odds that much more. I'm going to show you a class and I'm going to put all of it together. Now, this class is about 15 minutes, 20 minutes. It's very quick. Please pay attention and you'll be very surprised at what I have for you at the end of it. Okay, you'll be very surprised today. Okay, like really, really surprised. Okay, so what I talked about is daily data, not intraday data. Daily data. So I'm going to do this class. It's going to be a very short class. I'm going to be answering questions, relevant questions as I do it. It's going to solidify and put together everything I just explained to you, and it's going to teach you something very, very important about what's the best day of the week to apply this, and most importantly, why. And I'm going to give you a little clue. That day of the week may be today, and maybe today's the reason why I'm doing this presentation, okay? And maybe why I spent yesterday doing this presentation. I don't make money from this presentation, folks. This is not my money-making presentation. I'm doing this just for your benefit. Please don't go anywhere. There's not going to be a $2,000 program after this, okay? That's not what I'm here for, okay? So please listen and listen good. This will really help you put together the strong trend, the baby pullback, and the other part of the puzzle. And if you don't have this other part of the puzzle, then all that stuff I just showed you is not going to give you very much. And also consider those debit spreads. Those debit spreads is what I'm going to be focusing on because a lot of people love them because a lot of you have a small account or you just don't want to risk that much. And this is a great way to risk instead of $3,000, only risk, say, $150, okay? Thank you, Wild Ranger. I really appreciate that. That's very kind of you. Thank you. But listen to this. You guys are going to get a lot of benefit from this, okay? Please, please, please. I'm not going to, nothing is typical. There's a risk of loss in whatever you do, even walking down the street. Actually, I'm not going to be cherry picking trades. When we wrote this, we were cherry picking because we were starting, but our results was actually better than we were promising people. So it's really good stuff. Now, there will be losers. There's no such thing as a perfect system that doesn't have losers. I've never seen one. Even in the pit, and I've been doing this for 31 years, my win rate is like 94, 95%, which is twice as better than I've ever seen anyone able to do before. But again, I'm not your typical guy, okay? So let's begin. Again, this is going to be very short and sweet. I'm not going to take an hour of your time for this, okay? Now, back in 2022, lovely Celeste Lindman, Gramster's mom, was here, and we went public with something really interesting, a strategy that shows you a very specific seasonality going all the way back to 1927, okay? All the way to 1927. So we wanted to test it out, and we did with 119 trades, okay? And every one of those trades